It isn't red, it isn't blue. Orange Pill's here for you.
Hey, so for this episode of Orange Pill Podcast, I want to introduce us to an individual who lived, I guess about almost 2,500 years ago. And his relevance to today is because we talk about Renaissance 2.0. This is the new rebirth thanks to Bitcoin. Now, we've talked about Renaissance 1.0 and all the artists and the discoverers and the mathematicians and the architects drawn to Florence because of the Florin and the Medici family, how they made that unit of account like accepted all over the world and attracted the best minds. Now, I'm going to introduce you to Protagoras.
Oh, Protagoras. Doesn't that come from the word protagonist?
Yes, I believe so. Okay, so he was important to the Renaissance artists and thinkers, his ideas, because what happened is a disaster, the collapse of one empire and the rise of another, right? So Constantine, the last emperor of Byzantine, right, which was the remnants of the Roman Empire, the Holy Roman Empire, he was executed in 1453 in Constantinople, now Istanbul, as the Ottoman Turks took over. That was the year after Leonardo da Vinci had been born. So right around that same area. What happened is that the Greek scholars who were living in Constantinople fled Constantinople. And where did some of them land? In Florence. So because of that, he introduced, the Greek scholars introduced these classical ideas, which were very important to the artists of Florence. Remember, all the Greek classical ideas, the philosophy and the art and the human body, the form, right, they were important to these artists. So without that fall of Constantinople, driving these Greek scholars to Florence and introducing the knowledge about Protagoras. Now, Protagoras is an interesting dude. He's a pre-Socratic Greek philosopher, and we know about him because, of course, Plato. Plato wrote about him, and this guy Protagoras wrote a book which has a really cool title, which is relevant to the U.S. empire, I think. It was called The Throws, Throws, The Throws, and that was a term taken from wrestling, referring to the attempt to floor an opponent. Of course, we, in our democracy, based a lot on the ideas of the ancient Greeks, we have professional wrestling. We have a cartoonized version of wrestling. And that's kind of, the imagery I think of when we're comparing the American democracy to the Greek democracy.
Right. So I guess that would account for, in Florence, in the Renaissance, the Greek influence led to idealization of goddesses like the goddess of Venus.
Venus, yeah.
Venus was a Greek goddess. And so
Venus was I think the Roman version of the Greek Aphrodite.
Okay. All right, so let me get this straight. So Venus was the Roman version of Aphrodite.
Let me look it up while Max is talking.
Then we had, as I recall, I get the whole Greek kind of re-renaissancing in Florence during this period that we now call the Renaissance.
Yes.
So as Aphrodite was the Greek goddess, and then Venus is the Roman version.
So yeah, so that's obviously Venus was really, really important to a lot of Botticelli, Titian,
Right. And so then they bring in this more of a Greek philosophical orientation versus the fall of the Byzantine, fall of the Romans, right? So
The
you're
fall of
saying,
the Dark Ages, like that, where you by then the Catholic Church, right, the Vatican was ruling,
right.
so they didn't know about these Greeks. But importantly, what the ideas, the first sentence of this book, The Throws,
Yeah.
is really important. It still is relevant today. We still talk about this today, and some of the ideas that this guy brought are the foundation of humanism, which is what the Renaissance was all about. And you could also say, I'm going to read you this sentence, and it sounds a lot like Karl Manga and Austrian economics. The first sentence reads, "Man is the measure of all things, of the things that are, that they are, of the things that are not, that they are not." So he was saying that things are true or not true according to how the individual perceives them, which I think is really relevant to today with this struggle with truth and fake news and stuff like that, because there's a certain body of the body politic that doesn't want to abide, that their two ideas of reality are completely different, right? And one side wants to force on the other side that you can't think like that. But Protagoras came up with the idea that all that we know around us is the truth according to how you perceive it, because your truth might be different than my truth. His other sentence in this dialogue of trying to uncover the nature of truth, he said, there are two sides to every question. So that now is, there are two sides to every story. But he was saying that every argument has an opposing side that is worth understanding or has its own valid reasoning.
Right. The protagonist and the antagonist, I suppose, if there's some antecedent there.
Sure.
But the man is the measure of all things. Now, that's something I've heard and is a common phrase. I didn't know it goes back pre-Socratic Greek philosophy to
From Protagoras.
from Protagoras. And there's two sides to every story. So this is the thesis and antithesis or antithesis.
Yes.
It's the dialectic thinking of Hegel, I suppose. So, this is the beginning of the ever kind of insatiable quest for truth and knowledge, by delving into the yin and the yang, the positive and the negative. And the when it comes to individual sovereignty, it's not that man is the measure of all things. It could be the individual sovereignty, which Bitcoin, okay, so if we leap ahead of Bitcoin, it gives people that individual sovereignty. That gives people the ability to measure things in the way that they want to measure things. Because if you are Bitcoin sovereign, then the question is, if you're interacting socially and economically, you have to see everything as Bitcoin as their base money. So everything has value tied into Bitcoin, and Bitcoin is the hardest money ever known in history. That's what makes it so fascinating. And it is a leap. I mean, you're talking 2,800 years ago. So, this is historically where Bitcoin should fit on this kind of multi-millennial timeline in terms of humans' quest for knowledge and inner knowledge and then, science and everything that comes with it.
Yeah, the questioning. So, of course, think of Florence at that time. The Vatican ruled all. The Vatican had excommunicated at one point the entirety of Florence. So there was one truth, right? And only the Pope could tell you the truth. The Pope is infallible. The Pope delivers the truth as told to him by God. So there was one truth. And here they were being taught, the Greek philosophers, is that in fact, it's not from the gods. In fact, we'll go into that about Protagoras, because Protagoras was driven out of Athens because he decided let's jump to that, because he was kicked out because he said on the gods, he wrote, "Concerning the gods, I have no means of knowing whether they exist or not, nor of what sort they may be, because of the obscurity of the subject and the brevity of human life." So he said he, as a mere human, could not know if these gods like Aphrodite were true. And the people of Athens did drive him out of Athens. They exiled him for saying this.
Right. So the historical setup here, let me get this right. So Byzantine Empire collapses, Ottoman Empire is on the ups.
Yes.
But Vatican is still around. and the Vatican is in Italy, and they are at odds with Florence, because Florence is really going its own way and trying to break free of the orthodoxy of the Vatican's somewhat, because they are actually becoming aesthetic, right? The Medici family was really more of worshiping the aesthetic and worshiping arts and science, and so these questions of God and what is God, that go back to the Greeks, I suppose, infiltrated the mind of the Florence mind, the Florentinian mind, right? And so there's a bit of a few stitches that you can sew between that historical line, and of course, I guess but the Vatican and Florence both had a common foe with Ottomans.
Yeah. So, I mean, the point is that there was the Holy Roman Empire, right? And that is disintegrating during these dark ages. And the Byzantines, that was the end of that Holy Roman Empire, essentially. Like that was the last emperor of Byzantine. So the Eastern Church, the Eastern Empire was gone. That was it. They were sacked by the Ottoman Turks. Remember, Constantine had been basically, there was no help from Rome, right? He did plead to the Vatican, said send troops. They didn't. So he fell. He was executed, and he's gone. But the point is, again, so here we have this seemingly a horrible time for certainly the people who were driven out of Constantinople. They got sacked and empire collapsed. So right now, what we're seeing in the birth of Bitcoin, when the Bitcoin white paper was published, Chancellor on brink of second bailout from bank, it is a tumultuous time. It is chaos. It's a collapse of a certain understanding of the world around us and the organizing principles of the world around us, where it was revealed to all that this game is rigged, and it's rigged in the favor of certain parties that were protected, while the financial system got sacked, and everybody else was left to fend for themselves.
So you're looking for historical precedents to kind of for some insight.
Yes. So all these ingredients went into it. The hard money of the florin. And hard respected money. Gold was available to all. All gold merchants could create their own unit, but people trusted the florin. Then you had into that mix, you had ideas like these Greek philosophers. If Constantinople had not fallen, and these Greek philosophers, these Greek scholars had not fled and arrived in Florence to then have Leonardo da Vinci grow up learning about these Greek philosophers.
Let me ask you this, broadly speaking. So with the Greek philosophers, of course, at that time, under the Greek, let's call it religions, right?
There was gods.
There was
theism.
Polytheism. And during the rise of the Vatican, obviously it's a rise of monotheism. So now we go back to Florence. They go back to the Greek philosophers, but which I suppose the Vatican would associate with polytheism. You see, they probably made that connection. Like that's why they would be like, wait a minute, we are not polytheists, we're monotheists. So they have a kind of a baked in bias against Greek philosophy because they equate it with polytheism, erroneously so, I would say.
So, yeah, I think it's more than that. I think it's also like the only way to heaven, the only way to absolution was through one individual man, which was the Pope, who was spoke for the gods, just like kind of the pharaohs had spoken for their many gods. With the Greeks, and what we're saying is they were focused on man, the individual human. Right. Yes, there were many gods, but the gods themselves, like they might get angry with you and throw some lightning bolts at you and kill you.
So this ancient Greeks with the man is the measure of all things.
Man is the measure of all things.
And it's a humanism. And they had polytheism, but at the same time, they also were humanists, you could say.
they had all these philosophers, and all these philosophers were debating with each other and challenging each other and willing to go as far as possible with these ideas, like not shutting down, deplatforming any ideas. I mean, well, I suppose Protagoras was driven out of Athens because the people didn't want to hear about these, that gods might not exist. But so the example they use for man is the measure of all things, of course, is very similar to the notion of all value is derived from human consciousness.
Right.
So it's humans, it's man, it's women, it's individual humans that give money its value, not the state, not the fact that they can impose taxes on you or break your kneecaps.
Right.
So what the example used when talking about Protagoras is like, for example, person X may believe that the weather is cold, whereas person Y may believe actually the weather is warm and this person is warm. So you can't say that one of them is lying because it's their own unique, according to the philosophy of Protagoras, there's no absolute evaluation of the nature of a temperature because the evaluation will be relative to who is perceiving it.
Okay, so this is the price discovery.
Yes,
right? So
yes.
Both sides have a perception.
Yes.
So let's say the item in question was a sundial. And one of them person has perception of frostiness. The other one has the perception of warmness. They're interested in a sundial because it helps them understand at what point during the day they may have this varying perceptions of the weather. And so at the end of that conversation, the sundial is traded from one to the other. And that those biases of cold and heat come into play. It depends on if somebody has a genuine urgency to get that sundial because they have a reaction to their cold that is excessive compared to the other parties whose reaction to the heat is maybe not as excessive. The price discovery comes into play and a price is established and there is communication in the form of trade. There is communication. Now, flash forward to the 21st century, the entire world's running on fiat money, which has no limit to its printing. And you understand why communication is horrible. You understand why there's fake news. You understand why there's a propensity for propaganda. Because no trade today is done with honest price discovery. All trade today is done with the knowledge by at least one or both parties that the money being used to transact is funny money, as Christine Lagarde would call it, with infinite supply. And this is resulting in an imperial collapse, the American US dollar collapse. And so you're saying, well, you had a collapse of the Holy Roman Empire, when the rise of the Ottoman Empire, then over to Florence, which was the Medici family, and the florin, which was a standard suddenly of account where price discovery was back in vogue, echoing the philosophers from ancient Greek times. Is that what I'm hearing?
Yes, in a roundabout way. And price discovery, let's talk about, Elon Musk bought $1.5 billion worth of Bitcoin. Well, he could only buy $1.5 billion worth of Bitcoin. Should somebody think that was a good price to sell them at? So somebody thought that was a good price that they were happy with. And Elon Musk thought, well, that's a good cheap price and I'm going to buy it. So that's one thing. But in terms of this, this Protagoras' idea that man is a measure of all things, and what we're seeing now as a similar situation of the fiat dark ages. I talk about those fiat dark ages all the time. And there's an absolutism, there's an authoritarianism about it. It's like, you must accept our truth, or else, if it's the Paul Krugmans of the world, we're going to send the gunmen after you, the thugs, and break your leg and take, and tax you. And if it's the cultural elite, they don't want you to have any opinion but their own. And you could see that because there was a tweet, I guess, this week, and I gather that the Democrats are interested in something called a reality czar. So they want to have a reality czar who will, yeah. And the reality czar would monitor the internet and stuff like that, kind of like what the Chinese do to monitor the internet. Like there is no reality about Tiananmen Square in China. Well, they're saying like they're not going to be oppressive like that, but they're just saying that their reality is the reality. But man is the measure of all things. So maybe right now I'm wearing a short sleeve shirt. Maybe Rachel Maddow would be here and she would be cold and think maybe I should put on a sweater.
Speaking of bug eyes, this reminds me of Clockwork Orange. So at the end of that film, the protagonist eyelids were propped open, forced to watch ultraviolence until they become pacifists
Yeah.
at the
Yeah.
command of the state.
Yeah. Yeah.
Now, here we are. That was a famous novel, of course, and it came out of Great Britain, home of many dystopian novels like 1984, like
Yes. They saw totalitarianism up close.
Right.
And this is a totalitarian. Totalitarianism doesn't, it always gets associated strictly with fascism and kneecapping and stuff like that. But it is also like a gaslighting. And by the way, I want to point out that gaslighting has, if you look at the search Google trend, it soared from 2019. So the people are smart. The people understand man is the measure of all things, and they see what's going on. They see they're being gaslit by the elite, that by those who would be our gods.
A reality czar is almost by definition totalitarianism.
It's definitely totalitarianism in my mind, and gaslighting. Gaslighting is a form of psychological manipulation in which a person or a group covertly sows seeds of doubt in a targeted individual or group, making them question their own memory, perception, or judgment. So remember, man is a measure of all things. But
Right.
if you gaslight them, if you tell them they don't know how to measure all things, they don't know how they feel.
The price discovery in your own mind is warped by gaslighting.
Yes.
Now you know where that term comes from.
What? Where?
The film called Gaslight. And there was a film, I believe in the 1950s, called Gaslight. And the storyline is that this woman drives, one character drives another character insane by gaslighting them, what we now call gaslighting, by changing everything around so that they're constantly questioning themselves. And they think they're going insane because the coffee pot that they thought was there is now over there. And then this was repeated famously in a French film. That perky little gal in the French film, who it was fantastically successful, and she was gaslighting this guy who she hated in the film, and it became a huge international sensation. Madeleine or Madeleine?
It was. Tell us. Was it in the last 5 years,
Yeah,
10 years, 20 years,
10 years.
50 years ago?
The last 10 years.
Yeah, the one that lived up in Montparnasse
Yeah,
or Montmartre.
Montmartre, yeah.
Yeah.
So that was like a variation on this film called Gaslight.
Actually, I don't think it was Madeleine. It was like some other French name. But we all know. Everybody in the audience is shouting in the comments. It's a way to get engagement. But in terms of this gaslighting, they want to have a reality czar. I remember also in the news this past week, we saw the headline that a mysterious person, somebody like Fernando País, like meaning country, he has, Salvatore País, has filed for patents under the U.S. Navy with a device that can bend reality. So here they're going to have a device, where the empire, the fading empire, which wants to control your, have a reality czar, is going to bend reality to whatever, so they could bend reality to whatever they want it to be. The price discovery, as Max says, they always fix the price first and then make the reality get to it, whatever suits their needs. Did you find the name of that film?
Well, the film Gaslight's from 1940, and I just read the storyline has to do with changing actually the gaslighting, and that's an interesting the phraseology that derived from that,
I also want to read another in terms of reality czar in the last moment here before we go to our guest. I want to say the secret of Bitcoin success is all about energy conservation. Max Kaiser tweeted, and he was referring to an Uber fax where they said recent research suggests that the brain's default mode is altruistic. It may take less brain power to be selfless than selfish. So think of reality czar, and the reality around us as they try to push the exact opposite. So Bitcoin is actually conserving energy because it is altruism. It's a way to basically harness greed and all those thoughts of like gaining everything for yourself over everybody else. Like you're unable, it harnesses all that because you're unable to achieve elite status in Bitcoin. Even Michael Saylor, he is not elite. He's just as equal to somebody who has five Satoshis.
Well, we talked about this, the compounding of interest that is the transformation of greed into altruism vis-a-vis Bitcoin. And Nomi Prins, of course, spoke about this on an earlier show.
It was actually Nozomi Hayes who spoke about it.
So she spoke about it on an early episode. And this is a theme we've talked about for a long time. That altruism is actually, it's a strategy used in strategy games. Like, people assume altruism is just always a losing strategy, but it's actually sometimes a winning strategy. It's not used often, but with Bitcoin, it transforms greed into altruism, and then altruism becomes the primary gaming strategy used by everybody. And so that is nonviolent, right? So, passive resistance is altruistic, and to a degree, you could argue. You know who's really good about all this? Looking at Wall Street and game theory and who's winning and Wall Street bets and all the folks that are angling with each other to try to get a competitive advantage is Nomi Prins, who's been writing about this for 20 years. She's written several books. We've had her on the show a few times. She's got the brains and she knows what she's talking about. So let's go to this interview now with Nomi Prins.
Nomi Prins, welcome to Orange Pill Podcast. Nomi Prins, of course, our audience knows who you are. You are the author of Collusion. We have all your books on our bookshelf here. All the President's Bankers, It Takes a Pillage. And I mentioned It Takes a Pillage because that was published in 2009, the same year that Bitcoin was birthed into the world, with the Genesis block saying, Chancellor on brink of second bailout for banks. So it's the same sort of milieu. You're in the same wavelength as Satoshi in terms of the injustice, essentially, of this financial system, the banking system that we have, the central banking system. So, I also must say you were a former banker as well. Before you became an amazing author, you worked at Goldman Sachs, Bear Stearns, Chase, and Lehman Brothers. So you've seen it all. You know it all. You know what you're talking about. And welcome to the Orange Pill Podcast.
I am thrilled to be on this podcast. And again, love the chairs.
Yeah, everybody, we need to start selling these chairs. Like if everything goes wrong with the podcast business, then we should get into the chair selling business.
Yeah, we're down to our last 2 chairs.
Right. So that's Max's mic is being pulled back in. Let's talk first about, in the first half of the show, we were talking about Protagoras, because we like to talk about the things that led to Renaissance and rebirth, and in particular his notion of man is the measure of all things, so that that there is no objective truth. But you are a mathematician and a statistician, so you are trying. That's a way to define some sort of truth, right? That seems to be one of these conflicts going on with the financial and monetary system. It's like there are many different truths. There's a financial system and a stock market and an economy that is lived in and known as real by the top 0.1%. And then there's everybody else. And these are 2 radically different economies, but they get lumped into the same measures, the same GDP number and stuff like that. So what's your overall view right now on yet another wave of, we have this pandemic lockdown, similar sort of economic catastrophe as 2008? But we're seeing, again, trillionaires, emerging out of the billionaire class. We're seeing this huge rise in wealth and income gaps again. So, what do you think do you think that's healthy for the system? You've been writing about all this financial sector for years. So do you think that's a destabilizing force?
It's absolutely a polarizing force between the real economy, which is, as you say, what we live in, what most people live in every day, and what things cost every day, and what jobs are available every day, and then what the stock market is doing and why and how it's propelled to do that. Because the stock market's also sort of an indicator that's on the news all the time, that's discussed. Like, the stock market is great, so therefore. So it becomes this catch-all just symbol, on the one hand, of where money's going. And then the real economy is basically where money's coming from And there's a huge disconnect because there's less money in the real economy than the stock market. In general, since the financial crisis, that GDP figure, the gross domestic product figure, which kind of looks at some elements of process in terms of where money's going and how companies are doing and what's flowing in and out, but just a component of it, that has only increased on average by about 2% per year on average. It's had negative years, obviously, in 2020 and so forth throughout that, only 2%. The stock market has increased by on average 12 to 13%, with some years being 22, 25%, some being negative. But the point is, the increase is a major chasm, and that is because, not just because, but predominantly because it has a crutch, and the crutch is the Fed. And there's a lot of people now saying that, well, you blame the Fed for everything, that's so easy. Well, we don't blame it for everything, but the Fed has created and has on its books $7.5 trillion worth of assets in return for money that they put into the markets under the guise of helping the real economy. And that's the real myth that happened at the wake of the financial crisis, that this Fed process helps the real economy. Well, the numbers, going back to the math, don't show that, but the narrative continues to be that. Every single time any Fed chairman, now it's a Fed chairperson, now it's Jerome Powell, Janet Yellen, it doesn't matter. They talk about Fed support for the real economy, that famous dual mandate. We'll have, great employment figures, full employment, low inflation, everything will be awesome. But they actually look at the markets, and the markets go up on what they do. And that's just the reality of the numbers.
Right. You have a great essay out responding to what we've seen with the Wall Street bets, GameStop, and some hedge funds. And you name names. So you say in your essay, hedge funds like Melvin Capital, Citron Capital, Point72 and others, while projecting legitimacy, offer a promise not too dissimilar from Charles Ponzi's original Ponzi scheme. The difference now being that they aren't just relying on individual customers, but an incestuous cadre of Wall Street's finest. That means they are also backed by lots of institutional money. When one falters, if it stands to impact others, they'll step in to help. Small investors don't get the same lifeline. So here during the Wall Street Bets episode, the curtain was pulled back, and we saw, as you say, incestuous conflicts of interests and outright, what I would call, in my opinion, having been a securities professional, outright fraud. These guys are going to go to Washington now and talk to Congress, Nomi, apparently during some hearings that are being held. We've seen that before. What will be the outcome of those hearings, in your opinion?
I honestly don't think there's going to be a tremendous outcome, because what's going to happen is they're going to go and they're going to say, look, we do invest customer money and we do have an obligation, even though hedge funds technically don't have a fiduciary responsibility to their clients, but they're mixed up with asset management funds that do, and they sort of work together. The larger banks clear or hold securities for these hedge funds. So when I say incest, I mean, it is all of the big players work together. The bigger you are, the more big player friends you have. And these people also lobby. They also provide money to Democrats and to Republicans to allow them to pretend that they're now being either more transparent, or they might adhere to a couple little slaps on the wrist or whatever. But we saw this after the financial crisis. We've seen this after long-term capital. I mean, this is something that's been going on and on as hedge funds have been becoming larger, and their relationships with asset managers and the rest of the sort of FDIC insured banking community street, who are also really traders in disguise, traders and traitors, but TRADERS as well in disguise, will basically say, look, yeah, we need to protect the retail investor. Okay, yeah, maybe that's something that's important, because yes, we recognize that they're now a growing class of investors, and they can get hurt, and they're going to just come in there and be like, we need to protect them. And therefore, if there's any restrictions that are placed upon trading, I think it's going to actually hurt the retail investor. The main problem with what happened with GameStop, there's two. One is that there's a lot of retail investors, there's a lot of investors, a lot of traders who don't necessarily know when to get out of a trade. I mean, that's the thing. And in this particular situation, because it was also, this trade was making money, basically going against the short squeeze of the hedge funds for the retail Reddit community and Wall Street Bets for a while, it was very, sort of self-fulfilling, you're buying more, you're holding, you're doing all that, you have a team effort going, and that's very intoxicating, and that makes the price go up. That's just what happens. When there is demand in a market, the price goes up. Whether or not that demand can hold, whether or not that demand's there for a minute or a day or a year or 20 years, it's about intensity and volume and momentum over a short period of time, especially nowadays. That's the big thing that's happening in the stock markets now, is that there's a lot of momentum plays. And therefore, if you're not taking money out or booking profits along the way, I'm talking about retail, at some point, these hedge funds are going to aggregate. They might lose on book for a while, but then their friends are going to come in and they're going to help, and they're going to inject capital, and they're going to do what Robinhood did, which was prohibit them from getting, retail investors from getting out of their trades at some point, saying it's because of volatility. And it is, but the big boys, in the meantime, are consolidating their position. They're reducing their losses. They're able to get out or into trades at a VIP level all the time in terms of how the market is constructed relative to retail. So what should come out of hearings? What should come out of hearings is that retail investors, whether they are buying one share or one option, or whether a hedge fund is buying a million and a million or whatever, that they receive actually the same treatment, the same speed of execution, the same avenue of access. That levels the playing field. I don't think that Congress is honestly capable of fully understanding that. And I also don't think that they will do anything to make that happen, because that involves taking on all of the both individuals and companies that support the bipartisan nature of what the relationship between Washington and Wall Street is. So they'll talk about it. But the only thing that changes the level field, that protects the retail investor, is access and execution, and obviously experience and education and learning to get out of trades and take money out of the market as they move along.
Right. Now there were two, let's call them blatant frauds, that the Wall Street Bets scandal exposed. So let's talk about the first one. It came out that Melvin Capital had sold short more than 100% of shares outstanding of GameStop, close to 200%. This would be an example of naked shorting or counterfeit sell orders. In other words, you're selling stock that doesn't exist, you're counterfeiting stock into the market to blatantly manipulate stock. Okay, this came out in black and white. Nobody disputes that this was what was going on. As a matter of fact, Michael Burry, famously from The Big Short, was the first to identify this. So when you go to Washington, D.C., how are they going to explain this? Because you can't sell something that doesn't exist. That's pretty clear. Even a congressperson, I think, can understand that. If you said we sold something that didn't exist for this, and it's for the reason of manipulating the stock price, that's scandal number. That's smoking gun number one. So how are they going to explain that?
What they'll probably say, there will be Congress people that say, yes, we should get rid of naked shorts, because they understand that as like a term that somehow means you're selling more than exists. Now, they've had this conversation and they've had hearings about this on the Hill in the wake of the subprime crisis. I'm going back before that. After that, every so often there's a conversation about naked shorting, and then the retaliation of the industry to the ability to naked short is that, well, we're protecting, hedging is normal. It's basically something that we need to do in order to sort of protect the efficiency of the markets, blah, blah, which we all know is a lie, because they are effectively borrowing more than exists. They are borrowing from the same cadre, which is the term I used in my piece, of banking institutions to be able to do that, because they're not just shorting or selling what they don't have. They're borrowing what doesn't exist, and they're borrowing money to borrow what doesn't exist, which is kind of what happened in the subprime crisis. So you need to basically in Congress say, all right, well, you can't naked short. Shorting is okay. Shorting is not the problem. It's two things with that community. One is shorting more than, as you point out, is available, and borrowing money that the value of that short can cover if the short goes in the right direction for the hedge fund to repay the banking institution that you have margin requirements with. So there's all these like little other things that are going on the side of the short. It would be good if Congress could say, all right, well, you can't over leverage into a short, because that does two things. Like, you can't borrow more than exists for that particular security. But that means they would have to get into the nitty gritty of individual names. So they're probably not going to be able to comprehend how to do that. It's not hard. You basically tell the banks that are lending money for these people to borrow, for these companies to borrow, and then short, not to borrow more than exists, and have them do the due diligence on that. But they're not going to do that, because that involves telling banks how to do their job. So they won't do that. What they could then secondly do is say, you just can't naked short. There's an outstanding volume of shares for a particular name. It's public, particularly in the names that we're talking about, GameStop up to Apple. I mean, these things are all publicly available information. Any congressperson can look at them. Any regulator can look at them. Any banker can look at them. And obviously someone, Wall Street Bets or any Reddit community can see them as well. So the easy thing to do would say you can't short more than exists. Do I think they will do that? No. Do I think they should do that? Yes. But I think there's going to be a lot of arguments from the other side that, well, you can't know that in the heat of the moment, volatility of the market, it would disrupt stuff. We need to be free to, all these other arguments that are going to sort of make it very murky to potentially follow that. So what I think is going to happen ultimately out of these hearings, and Janet Yellen as Treasury Secretary has somewhat indicated this, but not with actual words, just with indication, they're going to talk about transparency. That's what they're going to do. They're basically going to say, hedge funds need to be more clear about what they're doing, or something of that nature, which they're not going to do because they don't want to do that. And it's going to be something like, more reporting mechanisms, which aren't going to help in the day-to-day trading activity. But I think there's just going to be more metrics imposed upon the industry. But again, I don't know that that's going to change the nature of this just simple disconnect between the experience that a hedge fund has in trading anything, shorting, long, execution, everything, high frequency trading, everything, with the individual investor. So I think that means individual investors actually have to be smarter, get smarter. I'm not saying they're not smart. I'm saying that they have to incorporate, if they're going to be involved in the markets, like a good thing to do is incorporate the knowge that the system is rigged and work with it.
Yeah, let me push back on that a little bit, because what we're saying here is that when asked to explain how you can sell something that doesn't exist, the explanation is a lie. So in society, people see that, as Eric Holder, under the Holder Doctrine under Obama, said that banks are too big to prosecute. He gave them a green light to commit fraud. Now we've got massive social unrest and riots from coast to coast. And the thing is, if I get caught stealing and I go to the judge and I say, well, judge, the reason I stole is because I'm hungry, the judge is going to say, well, you broke the law. You have to deal with consequences. If I'm a hedge fund at Melvin Capital, and I say to the judge, the reason I stole is because I have a yacht payment. So you're saying the judge will say, oh, I have a yacht too. That's fine then, right? It's a two-tier society. There is no justification for this whatsoever. And therefore, the social unrest that's going on right now, the Congress has a chance. Anyway, let's get into the second scandal, which is provable, demonstrable, and evident in this GameStop incident, and that is brokers buying order flow. Okay, explain what that means first.
So if these brokers or large funds or banks that are their custodians or any of the mega companies that see flows in the market, what happens is this: a retail investor or a small company or a small buy or sell order is something that it kind of is held in a system until it gets executed. So for example, if I'm a retail investor and I want to buy 100 shares of X at $100 a share, I'm going to put in an order through my Robinhood or through my E-Trade account or through Fidelity or whatever. And I'm going to say, when the price is at 100, I want to buy 100 shares of that stock at 100. So that's known. That's now in the system, whether it's a New York Stock Exchange traded share, whether it's somewhere else, in the world, whatever. There's an order out there, and there's many, many, many of these. And if you're a large institution, let's say you're backing, for example, Robinhood. Let's say you're Citadel backing, Melvin Capital backing, a bunch of investors backing Robinhood or whatever the chain may be. What you're saying is we want to know that in advance, because if we know that there's all of these orders coming in at $100, we can basically get in right before the orders, right? Because we know they're coming. And we can go in and buy at 99.99 or whatever it might be. And that tick, once all of that order flow then gets executed, is kind of waiting there at a lower price than all the other order flow that's now coming, that's going to also bid up that share if it's on the buy side. And now that 99.99 is worth more than that 100. It got in lower. And if the market does go up, that 99.99 execution is always going to be more valuable than the 100 execution, right? Or whatever that differential might be. So by buying order flow, they're buying the right to see all of the orders that are going to happen and make a decision before those orders are executed as to what they want to do on either side of that. Now, if it's a computerized situation, it's which it mostly is. It's easier because what you're doing is you're looking at the math of the incoming orders that you've bought, because that's the agreement you had with the brokerage, the online brokerage, let's say, and you can make decisions before all those people have a right to change their order, to see what you're going to do, and you can also sell against it. You don't just have to buy and have the price go up and be the lowest offer. Buy at the cheapest price. You can also sell the other side. So by just having more available information, you have, as a large institution, the advantage. Now you add to that the size of orders, and the way in which you can move the market by the size of those orders. And then you add to that, maybe we look at esoteric names. And when I say esoteric, I mean, it's harder to push Apple up and down than it is to push GameStop up and down. Right? So not that GameStop is esoteric, but there's different magnitudes. However, if you're a large enough fund, every little tick is going to be profitable because you have the information in advance. That's what you have, the information in advance. And therefore, that means that the market isn't really a free market. It's a rigged market. And these institutions pay for that additional information. They already have the size. They already have the advantage. They already have the system. And now they have the ability to see or buy order flow and trade with it or against it, depending on what works best.
Right. So, or the way to describe that would be stealing.
Absolutely. Right? You are stealing. The large institutions are
stealing, right?
Blindfolding and then stealing from the smaller retail investor.
They're stealing. So is high frequency trading.
That's exactly what that is.
So we just mentioned three ways that banks and brokers on Wall Street steal from people.
That's right.
And it's easily provable. And there's a huge track record of it. And we know that the excuses they give are fallacious, So, it's medieval. It's medieval. This is random despotism, arbitrary despotism. And, I've done some reading in the history of medieval Europe. You had the thing like a droit de cuisse, right? So any nobleman could arrive at your house and have sex with your wife. That was their right. Mm-hmm. So we're saying that Wall Street can just come in your house anytime, steal your silverware, steal your bank account, run away, and they're protected. They're protected by Washington, protects this racket. When I see the violence on the street, I got to say it's tragic. But when history tells us that when you have an entrenched aristocracy like you have in America right now, stealing recklessly with no pushback, no law, sanctioned by Eric Holder and the Attorney General, you are inviting trouble.
That's right.
So don't come. This is really tragic, and I feel that I don't want to say any more, but the rest of the ingredients are all there.
I also want to jump in because medieval times is interesting because we talk about the modern time right now that we're in is Renaissance 2.0. And when the first Renaissance happened, you had the same sort of disintegration in authority of the Catholic Church, right? Not only had they done various inquisitions on people, which is never a good technique to get people on your side, but there was also the bubonic plague, and they had no answer for it. They had no explanation for why half the population of Europe had died. So people were starting to doubt that this church, which is supposed to provide all your known truth and explain reality to you, had no explanation. That was Florence flourished because of the Medici family and the Florin and all the artists there and the discoverers that were attracted to it and the mathematicians and the architects. Everybody was drawn to Florence, and it took us out of that dark ages. And I kind of feel like that's very similar to today, that we're in these fiat dark ages where there are these the equivalent of the corrupt priests used to walk around and sell indulgences, and it was really tawdry. And there was seemingly disintegration of that authority, as I said. And I think this could be because of Bitcoin, a moment like that, rather than, say, the lead up to the French Revolution, which was also similarly corrupt, and it ended in a bad way. But here we have an opportunity with Bitcoin where, it's not fighting that system, right? You're not having to go to Congress, ask them, please don't let these people plunder us anymore. Don't favor them and throw us in jail for, stealing a loaf of bread to feed our children. We exited the system and created an alternative. And I don't think it's any mistake that it just arrived right. And there was the beginning, as you call it. The full title of your book is "It Takes a Pillage, Epic Tale of Power, Deceit, and Untold Trillions," which is exactly what the story we're describing here. So we're relentlessly optimistic here that there is an alternative, and we've just exited the system. And, do you think Bitcoin, by the way, is just, it's too big? It's already grown beyond their ability to try to destroy it and keep their own Ponzi scheme alive.
Well, I think, to your point, it obviously, we got a situation with the financial crisis, 2008, 2009, where there was a moment. There's a bunch of moments, but there was a possibility of doing something to systemically, at least, dial back the inequities between the market system and the real economy, which had increased inequality, into that a period, and now since that, because that moment was lost. Right? We slapped some, multi-billion whatever dollar fines on the banking industry as a whole. And they said, okay, fine. So yeah, the guy or woman who steals a loaf of bread to feed their kids, they might actually, have a record. They might actually be jailed if it happened more than once or whatever. Whereas all of these CEOs, these institutions in particular, just went about their way, paid a toll, and sort of moved on. And that moment to systematically stop the system from getting worse wasn't taken. Bitcoin and other types of even some of these social networks, so people having their own sort of retail investment clubs and everything else as a way to at least examine, the way in which people could invest in things collectively, also grew out of the financial crisis, as did the B2B type of lending, because the banks weren't lending to small businesses or giving individuals good deals. They were just ripping them off of credit cards and everything else because they could. They got all this cheap money from the Fed. Bitcoin was the nascence was a lot of things, but a reaction to that idea of having the ability to ultimately get to a way of conducting commerce, right? Because ultimately this is all about, right now it's an investable, I would say, asset, or it's a part of a portfolio for many people, and it is getting increasingly more used in transactions, but the volatility is still quite high. To the extent the volatility ultimately becomes reduced because more people are involved, it's going to be used in more commerce, and that's ultimately, the idea of then having an external to the system ability to transact, to lend, to borrow, to pay. And to the extent that volatility ultimately is reduced by more people being involved, if that were to happen, that's going to create its own momentum. It started, though, because of that retaliation to what was going on with the monetary system. We don't have an alternative yet to the monetary system, which continues to be run by the Federal Reserve, I mean, other central banks as well, and everything else. And I'm talking too much, but Max, the point about, and Stacy, about social unrest is incredibly important, because the amount of individual, that's something I'm looking at into my next book, so I don't want to get off too tangent, but it's very important because it's very easy to see that pattern, that if people are disenfranchised from their economy, forget their government, right? I mean, people are disenfranchised and have different political views all the time, but when that's also very endemic of their own personal economics and the life that they lead and the way in which they live, we have had more civil unrest in more countries throughout the world on a regular basis since the financial crisis and the injection of all these trillions of dollars of extra capital from central banks than we had before, in terms of the dispersion of that social unrest, the left-right nature, the geographies, the developing countries, all of it. And that is a direct result of that angst.
Right. And, how is it possible to stop this? Because, you look back, and I would say probably it was the last few years of the Clinton administration when we had the repeal of Glass-Steagall, the introduction of the Commodities Futures Modernization Act, which, when you look at the documentary that was made by Beth McLean, I think it was, about Brooksley Born, and that Brooksley Born predicted exactly this catastrophe, that essentially you were going to unleash, if we're comparing it to back in the medieval days, like a financial inquisition upon the people, and that this would be a disaster, and it has been. But they seem like the Vatican at that time, which had no response to the bubonic plague. They don't have a response to this because there's no way to unwind all that fraud. So all they could do is keep printing money. We saw, speaking of Bitcoin, Stan Druckenmiller, who is an amazing hedge fund manager who hasn't had a down year since 1981. He just this week, speaking to Goldman Sachs, said he's very, very short the dollar because of the amount of money that we're printing, a 25% increase in the M2 money supply. It was interesting because I had seen on CNBC and Bloomberg that they were making fun of anybody in the Bitcoin space who thought that the 25% increase was anything to worry about. When they hear Stan Druckenmiller saying, well, I'm going very, very short the dollar because of this. So, who do you trust? Like Stan Druckenmiller or some presenter on CNBC? I kind of think Druckenmiller is probably right. But do you think, I guess the dollar is that settlement layer of this financial fraud system? Like, there's so much fraud. Warren Buffett would say, when you try to unwind the derivatives, there's no beginning of that spaghetti string of fraud. So, like, does it survive its 50th birthday, which is supposed to be August of 2021? So, like, how can it sustain as it is?
Well, there's the how and the why, right? The how relates to the why because it has a phenomenal amount of large institutions, large governments, ones with military behind them. I mean, in any definition of power, it has a lot of investment in itself. So from Bretton Woods through now and whatever it ultimately looks like, maybe in 50 years, we could have a different kind of a transition. I'm throwing that number out because the power of that collective to enforce itself is one of the reasons, for example, the stock market is sort of the only game in town for a lot of the flow that's coming out of basically the central banks, not just the Fed, but all the major central banks and some of the minor ones, into the financial sort of paper assets as opposed to real actual assets, because these individuals and Bretton Woods was technically created. Yes, it was created to reinforce the dollar, although that wasn't its original conversation. The conversation was we would have something a little bit more sort of global, and then it was like, no, let's have the dollar. Okay, we'll have the dollar, and that's ultimately what happened, and it's had its own momentum. The dollar is the reserve currency, and as the powerful currency. And as a powerful nation, that doesn't mean it's good. That just means it's prevalent, right? And so the fact that the dollar hasn't depreciated way more in terms of comparative buying power in the world. I'm not saying relative to what it would have bought in the United States 100 years ago in those terms, because it's depreciated significantly. We all know that. But in terms of the comparative value, it hasn't necessarily depreciated as much as you would expect our policy to make it depreciate, with printing all this money that has no real backing or no productive sort of idea behind it, because all the other countries are sort of caught up in the same game. And that's one of the reasons why, even when there's this talk about having the new monetary system and everything else, what it is it's tweaks to the old one. We'll have the SDR, we'll have a currency basket. That basket's going to, have 4 major currencies, and now the ren from China, from a few years ago, and it's kind of 5, but it's really mostly the dollar. It doesn't necessarily change the ultimate system. I think that's just going to take more time, not because it has value, but because it has a lot of institutional and establishment power behind it, and those two things are combating. So the more that we can fight against it from the outside, retail, individuals, innovative technologies, crypto, whatever it might be, that chips away at the immensity of that power. But we are dealing with the reality of how big it is, and that's where the dollar hasn't completely plummeted, even though we have huge money supply and very, very limited money velocity, meaning real people aren't exchanging a lot of money back and forth. That's at it's not record lows, but it's certainly quite low, whereas money supply is at record highs. We just have that disconnect everywhere you look from what's happening really and what's happening with this fabricated money system.
Right. Yeah, you talk about the central banks there in a way that sounds like they're undefeatable. Is Bitcoin that magic bullet that will put an end to the central banks? I want to read a quote from Senator Sani Musan from the Nigerian Senate this week, stated, quote, "Bitcoin has made our currency almost useless or valueless." That sounds like a central bank killer to me, Nomi. What are your thoughts?
If I think Bitcoin had the prevalence, not just as where it is now, but in terms of the prevalence that would allow the volatility of its movement to be in a lower threshold for that small retail investor to be able to sort of book something the beginning of a month and know it was going to have a similar value when they close their books at the end of the month. I think it would. I think in order to get to that point, there has to be more of a use through more of the population everywhere. So I think what we're seeing, and what you've been at the beginning
already
of this,
mentioned
is that
the
trajectory
volatility would ebb over
direction.
time, and then it would be used more as a medium of exchange. And right now, it's being put in the category of store of value for institutions, corporations like Tesla, like MicroStrategy, like high net worth individuals, like hedge funds, like Mass Mutual, like Fidelity, who see it as a hedge against rampant runaway inflation in terms of 15% money growth per year, the real inflation, not again, the palpable, provable, demonstrable lie by the government that inflation's 2%. That is a falsehood. So it's fulfilling that need right now. The volatility, look, I mean, you got to put it this way. You can accept the volatility of Bitcoin and have a guaranteed up move. Guaranteed up move, accept the volatility, or you can have no volatility and you will guarantee lose your purchasing power. So anybody with a brain, with 2 brain cells to rub together, would accept the volatility for a guaranteed profit. And that's what we're talking about.
I agree on that on the basis of the hedge, of the store of value, of the profitability of the upside. I do agree with that, and that's why whether you're a small retail investor or whether you're a large institution or a central bank, that are looking to sort of open themselves, or whether you're Elon Musk, who's looking to effectively, I think, do 2 things. One is to be involved in potentially the technology of making the mining, say, more energy efficient, as well as using it as ultimately a way to buy and sell Tesla. I think he's in both sides of that.
But it's a $1 trillion asset. It's in the top 7 most widely circulated currency on planet Earth, and it's about to take out the Russian ruble. It's $1 trillion, and it could very well be $4 trillion by the end of 2021, half the valuation of gold. So,
which is exactly why it has an upside value. Later. Yes, which is exactly why it's been moving like this. And every time you get a larger name in it, and you get more activity, it perpetuates its own upward movement because of all of that. And I absolutely agree with that. I think that at the point at which it becomes where it still has an upside, but it has slightly less volatility to ultimately be used as well as a commerce exchange mechanism for people. It doesn't have to be no upside. Obviously, volatility and upside are connected in some manner, but the sort of more jaggedness, if you're just a retailer, to the extent that you want to use it, not just to hedge yourself against currency risk or not just to invest and have the appreciation, but actually to sort of manage your customer, sort of flow. In terms of that, I think there's probably a value at which there's more and more people involved that makes that reliance for the sort of regularity of its use. And I think ultimately that will make a bigger splash. I don't know if that's the right word, but it will allow Bitcoin to have more of a prevalence in terms of really not just taking on or being an alternative to sort of central bank currency related activity, but actually can take over as the currency of choice in commerce as well. And they are two separate things. But as they merge together, I think the power of Bitcoin actually increases, even if the upside, and we're talking, the upside could be much higher than where it is now, of course, but even if the upside isn't as accelerated, the prevalence in commerce will have a sort of widening effect of Bitcoin.
Right. I want to jump in here because, this t-shirt I'm wearing in honor of seeing you almost 2 years ago now in Ojai, and Max bought this for me. And at the time we hooked you up with a Cash App and got you some Bitcoin. Do you feel, has holding Bitcoin, first of all, are you still hodling?
I still have, yes, I'm still averaging in.
Oh, good.
Yeah.
And has it changed your mindset at all? Because we've noticed that this is why we are called Orange Pill, because Orange Pill is like the mindset of a Bitcoiner in terms of like even time preference, that you have a lower time preference and you start to think for the future and build for the future. And Paul Tudor Jones, who I'm sure you know of as well, and he said recently about Bitcoin is that the thing that he prefers about Bitcoin, because not only does he think it's the fastest horse in the race, and yeah, he's going to profit more on that than his gold position, is that he said holding gold is like betting on a bad outcome. Like I was saying before, it's like the French Revolution outcome. You're betting on a bad apocalyptic outcome. Whereas betting on Bitcoin was like the past Renaissance. We just, like the Vatican power disintegrated and slowly went away, and up came these amazing thinkers and painters and artists and discoverers. And he says that about Bitcoin, that it's a bet on the future of humanity. It's a bet on human ingenuity. Do you feel that at all when you're looking at the Bitcoin community, when you're holding it, when you're like, does it change your mindset at all?
Well, I definitely, like I said, I can see it becoming more prevalent now than I could 2 years ago. And that's where, on the one hand, as I said before, I do think that it's going, and it has obviously had its own momentum outside of the initial sort of believers in the idea and the technology and everything else. I do. And I want to say, you mentioned Cash App. I forgot you also hooked me into Cash App. I think that technology, so sort of in general, when there's a new idea and that it allows other people with their own new ideas to sort of work together, with their own specialties, I think that has been kind of a game changer. And I actually, I use Cash App to show people two things, just because we're talking Cash App, how they can kind of have their own mini portfolio on their phone. And also I have felt through using it, and this is something that I use in my mindset to just consider any kind of app. I've been able to get money in and out very quickly. It's never stopped me from doing that. It's never stopped me from buying Bitcoin. It's never stopped me from selling to convert to cash, right? I mean, it's attached to my account, my bank. But and in that way, I think it allows individuals to really feel more comfortable, because you're watching it. You can decide to get in and out, and you actually can get in and out, when and if you need to. And I think that in itself, that combination of the technology being pretty consistent, or totally consistent in my experience so far. And the ability to both trade stocks, buy and sell stocks, as well as Bitcoin, and actually transfer Bitcoin or your cash that you can keep on reserve with Cash App as well between holders of that app, I think is a really cool technology. And so on both those levels, I actually talk to new investors in anything. Just get Cash App. So I've actually expanded what you guys have said, and you can buy $100 a Tesla because you can't afford to buy $800 or $900 a share. You can buy $50 of something else, and you can buy $100 or $50 or $25 each week, and average into anything to Bitcoin, as I'd been doing, and that way if it goes up and down, it's a way of hedging your own volatility. Which I was saying before. So in that way, you're personally hedging the volatility of what you're buying. I'm buying Bitcoin. If it goes down, you average in at a lower price. If it goes up, you see the value. If you want to take money out, you can. And I think all of that is actually really important, and it is a different mindset for me and for people that I think use it.
Right. Since we saw you a couple of years ago, we've since kind of moved on to swanbitcoin.com/orange pill because it's cheaper than anybody else. And they've got this great community that's going on. And I encourage you to check out Swan Bitcoin. And they have a bit of a think tank going on there with really smart people like yourself. Corey Clipston, you might want to get in on one of their what do they have? This Clubhouse. Yeah. Clubhouse deal where folks talk with this, they have the smartest minds. Cash App is like 2 years old now. It's yesterday's news. The Swan Bitcoin is the way to go. But I wanted to ask you a couple of things and get your response. It's common now for people to move amounts of $1 billion, $2 billion, $5 billion worth of Bitcoin for costs that are less than $3. So if you compare that to gold, for example, it might cost you $50,000, $60,000 to do a trade like that. That's kind of remarkable. Second of all, as a former Goldman Sachs executive, let me describe to you what just happened a couple of weeks ago in the Forex market and get your thoughts. A company called Zap has a product called InStrike. The executive in the United States sent $1,000 in dollars to his buddy in France, in Europe, that arrived in his friend's account in the equivalent amount in euros, and it took less than a second, and the cost was less than a penny. Now, what is that going to do to the Forex market, which is a multi-trillion-dollar daily market? It's the biggest market in the world by far, and it's where many of these banks are nickel and diming people to death and is the basis for much of their ill-gotten gains. Is that a Forex trading, as we know it now, killer?
It can, yeah. I think it chips away at the larger players because it goes back to what we're talking about with execution and accessibility, right? So if you have access to transacting and you can execute in a second, maybe less as technology gets better, whatever, but basically instantaneously, and you're assured, therefore, that there's not going to be movement in the value of what you're transacting, I think that's a game changer for people. For retail people, for any commerce, to basically exchange money without, and the big boys, so they work on the idea that there's spread and everything, right? So the easier it is for them to get into a trade and the harder it is for everyone else, the more money they make, right? Because they're gaming that system and they're effectively able to step in front of flows all the time, and that's how they make money, right? So to the extent that you reduce the time, you reduce their ability to manipulate and to trade currencies for that purpose.
Right. So
and
Bitcoin
I
is,
think that's awesome.
in that instance, Bitcoin is the underlying collateral, and the volatility is not an issue whatsoever. It's just a base layer you never see. Just like when you're on the internet, you don't expose yourself to the protocol that runs the internet, but you do commerce on the internet. Bitcoin is the underlying rails upon which the second layer applications are being built, and that there is no volatility in many of these transactions, right? So Apple Pay just signed up to do Bitcoin with BitPay, right? So they're not, there's no volatility issue in that instance. The volatility argument, I think, is from 2 years ago. We need to come down to Ojai or immediately and to get you up to
guys need to
speed
come back
because you're
again.
2
You
years behind the
definitely do.
curve, Nomi. You're 2 years behind. We need to get you up to speed.
I need to update, but I will say this. When I talk about volatility on that, I'm not talking about the instantaneous transactional volatility, because I think that, that has obviously gotten tight. You're transacting in Bitcoin and different currencies all over the world in a second, right? On the other hand, just to be clear, I was talking about what the value is, in the beginning of the month versus the end of the month or the end of the week or something. So from an instantaneous vol perspective, that is definitely something that has been taken out, that can be taken out. So I think as we get that to be the same, throughout, so that people can just, rely on closing, their small little company books on a regular basis, not merely transacting at that moment. I think that's a different kind of vol. The idea of instantaneous volatility be taken out. That's a very, very important factor for more people getting involved. And I think that will, and it is what we are seeing, get more people and more companies involved. The more companies are involved, the more people who have an iPhone, who are using Apple Pay. Apple Pay is using Bitcoin. You can transact right away. That spreads the use of Bitcoin. That spreads the use of being outside the regular old sort of school, sort of banking or monetary system. So it's a different time frame.
So as I had said, Protagoras said that man is the measure of all things, which includes women. So we can only know the truth of the world and as we see the reality around us. We have interviewed previously on Orange Pill Podcast, we interviewed Bob McElrath, who is a particle physicist. He was at CERN. And Max had mentioned infinite energy. And of course, he's a physicist and said there's no such thing as that. And so you're a mathematician and a statistician. So you're looking at Bitcoin as with your own unique take as well, because volatility on your balance sheet or in the math equation.
Right. You don't have to keep the coins. You can, for purposes of your monthly updates, you can instantaneously go back to whatever currency you want. You can elect to have coins or not. I just think it's overblown. And when you say that man is the measure of all things, including women, okay, that's a controversial statement, or it's not, because what I think about is James Brown. He was saying it's a man's world.
No,
that's what he says right there in the song.
Without a woman by its side, according to others. So there you go. But we're looking at the not on the side here. We're looking at
I was talking about man meaning all of humanity,
yes,
including women, not like man is a measure of all things, including women. That's
it would be weird if either one of your chairs were empty, right? I mean, it's
Exactly.
Are we starting about measuring men now? This is getting this is getting dangerous. This is getting dangerous now.
So I do want to say, and that final thing, because I like to stretch my analogies as far as possible. And, I'm talking about that Vatican. And one thing the Vatican, as it was losing power, what it did is used its ultimate power, which was excommunication, which meant something to people back then. And they excommunicated the entirety of Florence, for example, and when the Pope was angry with Medici. And, but once they used that power, they lost that power, essentially. And on, I think it was 2009 or 10, we had Jim Rickards on Kaiser Report. And I'll say, he's quite a hawk on Iran, but he said at that time when Obama pulled Iran off the SWIFT system, he was like, this is great, but just so the US knows, you can only use that tool once, and then they're going to come up with alternatives. And you do see that even Germany is leading European efforts to come to a solution or going around the dollar. And that's part of that, uprising on the streets, but at the top, the other elites of the world, if they're coming up with alternatives to your system, it just feels like it's all of this is happening at the right time, at the same time. The Bitcoin protocol coming around, it's uncensorable, it's neutral. It's the first time we've had in a long time since the early days of the gold like when it was decentralized, when gold was decentralized and it was gold merchants around the world that, kings and queens and pharaohs had to go to the gold merchant and beg them to finance their war. Now they don't need that. One day we're going to have all of these heads of states and central banks come begging us Bitcoiners to help finance their wars. And we're always going to say, no, we've got some podcasts to make.
Right. No, I think that's a definite good point. I think, it's not, Germany, China. I mean, there's different countries that have been trying to figure out ways, around the dollar, in particularly in the wake of the financial crisis. I mean, that has been happening. And also to get away from the monetary system that's sort of led by the Fed and the US centric system. So again, the more prevalence all they have, whether it's with Bitcoin, whether it's allowing, sort of more transactions centered on a company-to-company basis, or at least not getting in the way of them. All of that kind of expands this idea of having an alternative to the dollar-centric system, or just having an alternative to the central bank-centric system, which is basically what we're in. So again, I do think that the ease, the speed, the diversity of use of something outside that system is ultimately what's going to propel the system to change.
And the finality of settlement on that Bitcoin blockchain is amazing.
Yeah, it's a bearer instrument, and it's settled. The transaction is the settlement. Nomi,
Right.
You're a world recognized expert, author, ex-Wall Street banker, written many books on a forensic, detailed analysis of our system. So I'm naturally assuming that you will be testifying in Congress.
I
am I
have
right?
not been called.
What? Why
I
not?
have not been called. The last time I went to speak with the Fed, anyway, Race was on the Hill with sort of in that level thing, was when I told them that in response to the question, why isn't Wall Street doing more for Main Street, which was the question that I was, and I said, because you're not making them, which I thought was kind of obvious. But that was right after Janet Yellen had talked about how stable the banking system actually was because of Dodd-Frank and and their own money from the Fed that was stabilizing it. It's like, of course,
It's just a
stable.
sham. It's
If
just a
you give
sham.
every
Obviously,
human
the
the kind
people
of
who
money
go
that
there
you're
to
giving-
testify
yeah.
are handpicked apologists for these crooks. That's obvious because they don't have anybody like yourself, and you're a unique individual.
I'm irritating to them. That's
You get people like Bernie Sanders who will invite somebody like you. You were on his economic advisory team. So they will, you do get the rogue, congressperson or senator who will invite somebody like yourself.
Yeah, and every time there's a question about derivatives, there's a possibility because it's a little bit too complex for sort of the normal state of the conversation there. But I think all of the reason that they kind of keep things the way they are is because they listen to the same people over and over again, and so it's a it's self-fulfilling sort of prophecy of if we don't hear what we need to do to change, or we don't hear too much that makes us need to think about changing, then we just kind of won't. We'll just sort of dot some stuff around the edges and change some colors and keep everything the same, which is why the system will fail. I mean, I said this at the end of, I said at the end of All Other People's Money, which was my first book before the financial crisis. Credit derivatives will basically cause the system to fail, especially in the absence of Glass-Steagall. Like I said that, and then 4 years later it happened. And in the last bit of Collusion, which was my last book, I'm writing another one now. I basically said a similar thing for, even more intense reasons. So it's not just credit derivatives anymore. It's not just the system. It's basically, it's the sheer amount of subsidy that the system gets from its own central banks. And that is not normal. That is not natural. That's not real investment income. That's fictitious capital.
Well, it's like exhaustion, right? What's the term in physics where, a system just exhausts, right? It just like
chaos theory and fragility.
Yeah. It just tires. It becomes corrupt, whether it's a political system, an economic system, a financial system, a life cycle. It all becomes just corrupt. It just like gets
right. Well, we know that from the money printing, right? So it used to be that GDP relation to money printing, and it used to be like you print It took $2 of money printing to create $1 of GDP. Then it became $10 and $20. And now we're saying it's taking like thousands and thousands of dollars to print to create $1 of GDP. And so that's well past the pale in terms of any kind of reasonable economic policy. But I wanted to ask you, Nomi, if you take a look at the global central banks right now, Bank of England, Bank of Tokyo, ECB, Federal Reserve Bank, they're all kind of in the same book, as you wrote about in your book called Collusion, right? They're all basically on the same colluding team. But within that, there are probably weaker hands than others. I've been saying, so I want you to check my homework on this. I've been saying to people that, in my view, the weakest of the weak is the ECB. How do you see it? Where's your thoughts on that?
That's actually very interesting. The ECB is the weakest of those top four, and that's because they are so, in addition to printing money, sort of coddling they're their corporate market, but basically coddling their debt markets. They have the fraction nature of, sort of the core part of Europe, the periphery part of Europe. Now with the UK and Brexit, they're kind of in this situation where they don't know how to bring together the EU in general. From an economic perspective, which is not the job of the central bank, but they're basically dealing with that nature of disconnect between all the various different countries and policies, and not having a full sort of consistent framework, because they can't, because all these economies are different. They have been different. And so the ECB is basically always behind the curve. I mean, yes, Mario Draghi said, he's going to be limitless and Super Mario and all that kind of stuff. And everybody sort of says the same thing. The Japanese have used their central bank sort of zero interest rate policy for a couple decades now. It hasn't really changed much in the nature of how Japan operates, except that it allows them to know how much to invest in different parts of Japan. So there is some connection to infrastructure and sort of real stuff along the way. There is nothing like that with the ECB. There's nothing like that with the Fed. There's nothing like that with the Bank of England. And so they're all kind of weak. It's just the ECB has this added multi sort of personality nature of the different countries and their needs, and just trying to sort of throw money into sort of the air and hope it's going to somehow make its way down to all the various economies and all those individual needs in some manner, which it's not any more than the Fed saying we're going to put money into the economy actually is putting money into the economy. I mean, it's just not. But yes, Europe has the additional problem there.
The most amusing central bank to me is the Swiss National Bank, which just prints money and buys shares in productive assets like Apple and stuff. It's pretty remarkable that they're going to get away with that because they're so
But they don't even pretend. They don't even pretend to be helping their economy. No. The ECB actually pretends.
Right. So
it's crazy, all of them.
Well, thank you so much for joining us. We have to get you, Cash App is great. We actually own quite a bit of stock in that company, but we need to get you on swanbitcoin.com because it's like, they're also educators, they're Bitcoin educators, and they have a great outreach to the community. And I think you would be great on their clubhouse. They run almost a 24-hour clubhouse, and they're always doing, they have people like yourself come on, and I don't know if you know what Clubhouse is, but 1,000 people show up and they're asking you questions and stuff like that.
Yeah, definitely. We're going to hook you up with Corey Clipston over there at Swan Bitcoin in the next probably 90 minutes. We're going to get you as an advisor. We're going to be fully integrated, and we're going to get to the Clubhouse, and it's all going to happen. It's all going to happen right now on today.
Let's go. That was fantastic. Of course, everybody go check her out on Twitter. Send her thumbs up and an orange and a pill.
Definitely. Nomi is an incredible author. Her books are must-reads. And this is an exciting time for all of us. I'm very excited. Very, very excited. I can't tell you how excited I am.
Man is the measure of all things, of the things that are, that they are, of the things that are not, that they are not.
He was having a stroke just at that moment. He went on a rambling, digression.
So, according to Plato, by the way,
the philosopher or the toy?
The philosopher, not the toy. Protagoras is believed to have created a major controversy during ancient times through his statement that man is the measure of all things, interpreted by Plato to mean that there is no objective truth. Whatever individuals deem to be the truth is true.
Right. I think, as we've been saying, it fits in with this Austrian School of Economics idea that the value of everything is in your mind and
Human consciousness.
Human consciousness, right? That subjectively, everything is what is valued based on whatever people think it's valued at. So when you try to have objective values, you run into the price discovery madness. So price discovery collapses because the way we are designed as animals, as humans, as natural beings, as spiritual entities, it has to do with everyone having their own perception, having individual sovereignty, and transacting in a way that is mutually beneficial to all people, not in a coercive way. And that's the problem with fiat money. It's objective instead of subjective, and it's backed by authoritarianism, which leads to collapse in society and all kinds of problems. So, I've often had my own philosophy that I've been working on now for 60 years. And one of the theorems I came up with as an adolescent was that A equals B. And that what I mean by that is that everything equals everything. Everything that you perceive anywhere is equal to everything and anything you see anywhere. So it kind of rolls into this idea of there being really no differentiation between anything, any object, or any person, that we're all part of this global cosmic unconscious. Some now refer to that as the simulation. Some talk about the singularity. I think philosophically, though, you could simply say that everything is equal to everything. And if you take that concept on board, it also frees up your thinking, because so much of thinking is plagued by over-specialization. So, back in the philosophers' days, we had generalists, and we had thinkers who thought laterally about many, many things. Modern era, we have specialists. So, and they get paid in the big bucks. So if you're a specialist on quant trading on Wall Street, or if you're a brain surgeon that, is very specialized work, you are up on the income scale, but your knowledge of how systems work is poor because you're overly specialized, and you have a lot of institutional failure for this reason. A lot of times you have problems in the medical industry is that you have a lot of highly specialized personnel, but no way to care for the whole person in a holistic way. So the holistic nature of the care as such has been lost to this idea where we're just going to find that magic bullet and we're going to find the cure. And so people ignore things like diet, exercise, 2 ways you can improve your health instantaneously, without drugs, without surgery, without the whole medical profession. Under lockdown, when people have been afraid to go to the hospital, they've had to rediscover their own inner health and well-being, and figure out that, what, if I just stay away from the shit food and I don't overeat and I actually do some exercise, my health is going to benefit tremendously. So that's another way. In the old days, you'd have more of a holistic approach to living. And then the person who was thinking about their health would interact with somebody who's thinking about, let's say, governance issues. And they would say, well, the governance of our village should be similar to how I govern my body, right? There's a connection there, which is similar to how the nature governs itself. And there's an overlappingness. And actually, we're not competing with each other. We're all co-spiring together. The root of the word conspiracy is breathing together. You're co-spiring. You're breathing as one. That's the conspiracy of life. It's a prospiracy. Life is a prospiracy.
Right. And remember, I mentioned that Protagoras' book was called The Throws. And of course, the ancient Greeks are the ones that came up with the Olympics idea. I guess I don't know what their wrestling was like back in those days, but they certainly liked wrestling.
Naked.
Yeah. I guess they liked all those young boys wrestling naked. But the throws was a move. You throw your opponent to the ground. And today, in this empire, they had their Greek empire. We have the pro wrestling of the cartoon characters, but we also have the sophists, which Protagoras is one. The sophists are the teachers, right? They taught the well-off young men of the family, well-off families in Athens. They taught them philosophy, how to live, how to be the equivalent of orange pilled in those days, how to think, how to have dialogue, how to debate, things like that.
Right. Sophistry has taken on a bit of a pejorative
term
in our modern times, but it does in its ancient antecedents refer more to dialogue in a Platonic sense.
Max, of course, did study Greek theater, so the Greek playwrights, right? When you were at NYU, but the point is that today, just like they had wrestling that led to the Olympics, and we have the pro wrestling, we also have cable news, and it's not genuine dialogue, right? But it's cartoon version of what they would call philosophy and debate and dialogue.
Well, Greek theater, it was the beginning of virtual reality in a lot of sense, because they invented the proscenium arch, and that in fact you're the fourth wall you can't violate, and that there's action there that's you are observing, but you're not necessarily part of that action, although they had the chorus was part of the interaction and the bridge into the audience. But nevertheless, the idea is a bit of a virtual reality where you are observing the story unfold, that's separate from everything that's happening around where it's happening on stage. So to me, that's always been the root of all of everything, is really the concept of the theater, because the theater of the mind is quite powerful. We have a theater of our mind that we're constantly player, as Shakespeare said, we're mere players in all the world's a stage. I mean, this is our own cerebral connection and relationship to ourselves.
I mean, also when you look at, when we went to Sicily, think of what all the ancient Greeks, these their peers left behind. Those theaters, those stages, they really loved. They were they were very similar to us, right? Because that was the Twitter of their day. They had to go up and speak and talk to the crowd and perform for the crowd, and so they were always being challenged. They were always having to prove themselves and always having to debate, dialogue, perform.
Right, and the idea of dramatic theater and comedic theater, and they kind of invented comedy for the sake of comedy, and the theatrical representation of comedy, and the rules of comedy, the rules of theater, the rules of drama, the rules of narrate.
Aristotle came up with all that
of narration. As you point out, there's only the only stories are man versus man, man versus nature,
and man versus himself.
And man versus himself. So these are the only three real stories that exist. So, anything on Netflix, anything you might see in the theater, any story you're reading in a book, it is essentially those three one of those three stories,
and I think
combination.
Aristotle, I think, if I recall correctly, in Poetics, he puts man versus himself as the top of the tragedies. Tragedy, he considered the peak. Not, I mean, again, the words are similar, but not the same. Like, tragedy to us means something different nowadays than what a tragedy necessarily used to.
Right, and you have America's Shakespeare, Herman Melville with his classic Moby Dick. Of course, it's man versus nature. And yes. This is an epic battle, which ends tragically. But it echoes for the American experience, because America was a nation of whalers for one, until the petroleum took over from whale oil in the early 20th century, essentially. You had a nation of whalers, so the Northeast and Nantucket and those regions were very important to the culture, and so Moby Dick is echoes the history, the 2,000 years of narrative storytelling in the American theater of that time, with the characters of Moby Dick, the melting pot that from all over the world they come, and there's just an amazing panoply of characters and American values and experience. In case then someone like Mark Twain, who's obviously explores the comic veins of storytelling, and Huckleberry Finn, and these things are narratives that probe into the exact same themes that were present during the Greek time, but told in an American way. So the best way to understand American history, or any history, is to understand Greek history, and
yes,
particularly the Greek theater, which I believe is really the foundation upon which we have an experience that is dramatized. And our life these days, when you have things like reality TV, what's happening is you're taking the audience is now the play, right? So there is no, you're destroying the barrier between what's supposed to be on stage and who the audience is. So the audience is now the play. And this has an insidious, dangerous quality about it, which we see worked out in social media, where the phrase is, if the service is free, then you are the product. So the people interacting on social media are the players in a grand drama. That's the producer are the social media technology outfits. But you're an unpaid player. You're not being paid. You're performing for free. So like, like geeks, circus geeks, or like dancing chickens. I remember I told you in Times Square in the early days, in the late 60s, Times Square, it still had vestiges of the dime theaters of Houdini's day, where you had freaks and geeks and street performances, and there was dancing chickens, these chickens in boxes, essentially plastic boxes, and you put a quarter in, and this hot plate starts to fire off electrical charges, and the chicken's being electrocuted to death, essentially slowly, but for the amusement of people in Times Square. And that's who we have become in this casino gulag, as I call it. We no longer are the observers in seeking knowledge and philosophical actualization. We are just being treated like slabs of meat by these oligarchs. But Bitcoin slightly fixes this.
So I want to also continue on that what you're saying, because it's always been with us. We've always had dialogue and debate, and societies are always like pushing the boundaries of what is reality. And I talked in the first half about this reality czar that is supposed to be imposed on us and tell us what is reality. It might not be it's probably not going to be what you think it is. It's going to be what Rachel Maddow thinks it is, and that's going to be your reality. So you saw the debates. I told you Protagoras, he said, man is the measure of all things. And Plato explained that was considered very, scandalous at the time. It was like, it would have been a trending topic. Like, this guy Protagoras says there is no absolute truth. There is no objective truth. It's only subjective. That was shocking to the people. It did cause a trending topic, but then he did get kicked out of Athens. He was exiled from Athens because he said, because his life is too short as a human, no humans could ever prove that there is a God. So, he got kicked out for that, for saying that. But there were the gods. He said, not God, but gods, right? So today, of course, we have the same thing. People are exiled, deplatformed, kicked out for saying things that we all know now, most people in the Western world worship one God, right? And at that time, he was exiled for saying there aren't many of these gods. We don't know. Who knows? What am I supposed to know? Right? So he got exiled. Now you get exiled for saying similar things, like to upset the orthodoxy in some ways, that there's certain topics that are just so sacrosanct to our, the elite way of thinking, that, whether or not maybe the gods gave them powers, or they had unique relationships with various gods, that gave them power, gave them authority. I mean, that's the same sort of thing you're seeing now. People who get exiled for having wrong think is a similar concept.
Yeah, as we're just sitting here talking about this, thematically, how things tie back to the Greek dramatists and philosophers. There's been very few absolute original breaks from what was laid out so many years ago. And one that comes to mind in a way would be Mary Shelley's Frankenstein. Because to conceive of being able to create a monster in that way, I guess it would fall into man versus himself, or man versus nature. Because the monster Frankenstein, the question is, right? Is it Dr. Frankenstein? As a matter of fact, Frankenstein is not the name of the monster. The monster is unnamed. There's Dr. Frankenstein, and then there's the monster that is unnamed in the book. So
that most people think of the monster's name is Frankenstein, suggests it's actually man versus himself. That this is your inner monster,
or Dr. Jekyll and Mr. Hyde.
Yeah,
right. Is another man versus himself.
Yeah.
So I guess it falls under that rubric of that dramatic conceit would be man versus himself, which gives us, I think it's the most relevant, it's the most powerful narrative that we have today, because it's not man versus nature. Isn't, man versus nature is like Hansel and Gretel tales. They get lost in the woods and they meet a wicked witch. It's like nature, in
the trees come in on them,
trees,
and the bears and the pigs and the wild pigs and the monsters.
But nature is not a player. Nature's been conquered. Nature is dead.
But back then, it was a powerful force. So.
Well, during the first evolutionary years of humans, right, the woods and the trees and nature were hugely powerful and hemmed in, humans, and the forest was always regrowing quite rapidly. And you have, nature fighting back is a great story, like Godzilla, right? This is when, you're playing around with atomic weapons and you give birth to Godzilla, who comes out and destroys everything, right? So you're playing with nature, and nature fights back.
I'll tell you, man versus nature is this episode, because time is an element of nature.
You think so?
So it's time to leave this episode, but think of that as, all these negative interest rate bonds and stuff like that. Negative interest rates is our modern way of fighting nature, man versus nature.
Negative rates are a tragedy, and we're about to.
That's what we're saying.
Yeah,
that's what we're saying. So, and you know what? The Greek chorus is, of course, the Orange Pill Podcast Telegram group. And they jump onto the live chat during our microdose. This past week, we did 3 microdoses because it's a long story. If you haven't watched it, it's the cats. The cats intervened with our simulation.
But there's so much news, we have to keep up with it.
Yeah. There's been a lot of news breaking. And so thank you for joining us. And I hope you liked it. Leave some comments. Join our Orange Pill Podcast Telegram group. Subscribe to the newsletter, because that's the best of them all, orangepilldailydose.com. And subscribe to Stacy Herbert on Twitter, too.
Yeah, do that. Subscribe to Stacy Herbert on Twitter. That's definitely a good idea. That's the best Twitter feed. That's the only Twitter feed that I follow. Really. I mean, it says I follow more, but I don't. Everybody else is muted except Stacy.